Hey there, YouTube family. Yes, it is April and not May. Do not ask me how I got that mixed up. But my favorite comment that I got in the comment section was, Josh is clearly a time traveler. He's gone to May and is bringing us back technicals here in April. Today is all about the technical analysis, and I'm going to be doing a lightning round for the next 3 days. And I'm going to be covering large cap, big tech, crypto, penny and small cap stocks, and some ETFs. And I'm going to let you guys know if I'm invested or if I'm trading any of these. And I'm going to give you a variety of indicators to make the points that I want to make about these stocks. So even if you're not in these, consider it like a technical class, because we're going to be looking at moving averages, RSI, MACD, and other indicators like the Fib. We're going to be looking at it all, and we're going to be examining these stocks to determine how is the market going to impact their moving price averages? Are these things going up or down? I'm going to lay it all out for you guys. I think you're going to love it. Today, I'm going to be doing 5. I'm going to be doing the SPY. I'm going to be doing 1 large cap and 3 penny stocks just to keep things interesting. Before I begin, I want to share a tweet that we got from Mark Minervinni just yesterday. He was giving us his overview of the market. I appreciate this guy because he's one of these guys who has mastered Wall Street. He has learned how to take his knowledge and turn it into an ATM card and put it into Wall Street and pull out the cash. This is what he had to say about the markets. Let me read this to you. Market indexes are pulling back, which should be expected from an overbought condition. Trading conditions have improved, and that has allowed us to put on some select longs with a degree of success. We caught a nice move going into yesterday's long on APLS. Now the rubber meets the road, and we see how well stocks can hold and set up during a pullback. As far as the SPY is concerned, we remain on our January 13th, 2023 buy signal. Our stock trading risk model improved to buy alert, but is not yet registered an outright buy signal, which would suggest we are in an easy dollar environment. They're saying that he has not yet gotten that buy signal, which would suggest an easy dollar environment. Until then, I'll hold back on aggressive trading in terms of position sizing, holding periods, and overall exposure. Now, I've followed Mark Minervini. I'm going to attempt to break down and simplify what he just said. I think there's a lot of value in it because, like I said, this guy is a very successful trader. Basically, he said, right now, we're overbought. I've been telling you guys that on every single video that I've made in the last couple of weeks. I've been telling you that we are in overbought conditions. But he also said we're not capitulating, which means that even though we got into an overbought status, we're not falling like a knife right now. He says that because of that, he's making some select longs, which means that he's not out there just buying everything, all guns blazing. The markets are going higher. He is selectively picking stocks that he believes has the best potential for a rise. The buy signal from the thrust indicator that we got back in mid-January, he said, is still active. Now, he didn't put it that way, but I'm paraphrasing and I know what he's talking about. We got back in January, as well as back in October, a signal that's some refer to it as the thrust signal. Now, I shared that we had got this back in October, and that's why I told everybody that I was bullish going into the end of the year, and that turned out to be very accurate. And we also got that in January, and at the time, I also shared that. And of course, that turned out to be very accurate as the market went all the way back to recent highs. What is the thrust indicator? What is the buy signal that Mark Minervini is talking about? He's talking about a condition when there are more advancing stocks, greater than 60%, that are moving higher than there are declining stocks. Some refer to this as a thrust signal and believe that there is a very high probability that it means that this smart money is coming back into the market because they believe there's an opportunity for a longer, prolonged move up. We got that in October, and it did lead to months up. We got that in January, and it did lead to some significant upswing. Now, what he's saying is that we do not have any kind of signal, buy signal like that would cause us to believe that the next couple months are going to be super bullish. But he's also saying that we've gotten a buy alert, which means that because the markets aren't capitulating and they are slowly moving up, it could quickly turn to another buy signal, and we could see another move up. So right now, he's saying here's how he's managing it, because some of you are going to hear what I just said as extremely bullish and time to go long, but here's what he's saying. We're overbought. We're not capitulating. He is specifically saying that he's looking for a new buy signal, but until he gets it, his strategy is to have small position size and to hold for shorter periods of time and to have fewer overall positions to have to watch. So he's being very targeted and he's being very selective right now. That's a huge update. I hope you guys can absorb it. Ask me any questions you like in the comment section and we'll talk about it more. All right, I want to talk about the SPY. We're going to start off with the SPY. You guys know that I prefer the SPX. I typically use the SPX to measure the S&P 500, but a lot of you guys use the SPY, so I'm going to specifically talk about the SPY and the entry points that we have on it today. Back in March 21st, we got a buy signal, a pivot signal, around $393. And since then, we know that we've enjoyed a nice little run up, which is currently overbought and is now consolidating. But we're not getting a sell signal. We're just slowing down from the upward move. Now, I shared in the chat group on the Moomoo app, I entered into Tesla and SPY calls at that time based on that pivot that I saw. I didn't do a video at the time that I sold, but I'm out of those positions and I'm looking for another buy signal move, which I don't believe we have right now. Now, I could have shorted when I sold those calls, but I didn't. The only particular reason would be that I've just been too busy and I didn't feel I'd be able to watch it carefully. Guys, in regards to those type of sell signals and decisions I make, if you need better trade tools, you can click the link in the top pinned comment for the Moomoo investment app. They're currently offering up to 15 free stock, a possible cash coupon worth up to $1,500, and a 1-month free trial of Bazinga Pro. You get those cool things, you can start your investment journey, and then you can come find the chat group that I host on the app. Okay, as far as the SPY goes, I see the range as being between 400 on the low side and 418 on the high side. Right now, we are above the 50-day moving average, and I want to remind everybody that that's bull territory. I also want to point out that we've been largely range-bound since November of 2022. If you take a step back and you look at the SPY from November to the current moment, we've really been range-bound. And this is a reminder that the market has not chosen a clear direction for the last 6 months. It's slowly compressing into a more narrow price range, which typically precedes a much stronger move. We don't know whether it's going to break out to the upside or the downside, but it really does appear like we're largely going to eventually have to break to the downside based on the economic environment, the macro environment that we're in and that the Fed has caused. And at some point, the market's going to give us a clear direction. We don't have it just yet. Okay, I'm going to be covering 3 penny stocks. And some of you might say, Josh, I hate penny stocks. I'm not in them. I'm not in any of these 3 either, but I know that they're popular. I know that you guys are interested, so I'm going to quickly go through them. And I think there's going to be lessons to be learned even if you're not in them. The first one is Verb Technologies. I want to be very clear. We've got a breakdown warning on Verb at 0.102, so 10 cents. And if we get a breakdown on Verb beneath 0.102, we're going to be going to 0.057. That would be a 48% loss on Verb if we break beneath that critical line of support. So here's what I want you guys to understand about Verb Technologies right now from a fundamental view. You guys know that they're struggling with cash flow. They're struggling with not having enough cash to meet their operating expenses. And of course, the banking crisis aggravates that. It's a massive threat to their ability to raise the funds that they need to continue going. Doesn't matter how good the product is, doesn't matter how good the company is. If they don't have the operating cash to move forward, then they're just going to hit a brick wall. As well as the fact that Verb may also be struggling from a labor shortage. You have to remember the labor market, especially for the tech space, has been very, very tight. And even though there have been some tech layoffs, the fact of the matter is some of these smaller companies are still fighting for the very best talent, the very best developers and programmers to move their concepts forward. So they are still dealing with the bank crisis and they're dealing with a labor shortage. Okay, now if we talk about Verb's stock value, you need to understand that it's been decreasing due to dilution. Every time these guys dilute their stock, it means that all the existing stock that's out there is going to fall in value. And because we know they are not having sufficient revenue, we know that they're on a path of continued dilution, which means that the stock price is going to be on a path of continuing to fall. Now, another big reason why the company got punished back in Q4 of 2022 is that their revenue growth, instead of getting stronger, and despite all the advancements in what they've accomplished, was actually weaker. They lost momentum. This is also seen in the price action of the stock, where every single metrics that you use to evaluate Verb, we see a decrease in momentum. We're only seeing negative price action. Verb is a cash-strapped nano cap in the tech sector on the verge of a reverse split, and they're doubling their authorized shares to keep selling stock and diluting shareholders, because that's the only way these guys are going to be able to keep the lights on, and that's as straight as I can shoot you on Verb stock. Now, I own a little Verb only because the last time it ran up and I sold my Verb, I had some in another small account and I forgot about it and I didn't sell it. Because of that, I still own a little bit. So I am in the Verb camp with you guys on just a couple $100 that's obviously lost a fair amount of value. I sold the big chunk of my Verb stock at 57 cents on the last run up. I did a video, 2 videos on that time frame, and I told you guys, unload, unload, unload. It's time to get out of Verb. My average price when I sold it was at 22 cents, and so for me, it was a massive win. I think specifically I made $4,000 on that trade. That's because they had a short squeeze based on a news event that they were going to fight illegal naked shorting. That caused the shorts to get afraid. It caused them to kind of sell out in case there was some new momentum coming back to the stock. But once we got past that news story, it's just been dwindling ever since. And so it would take a major news event to move the stock forward. And you've been given the absolute bottom price of that 0.105. That's the point of no return. If you lose 0.105, you're going to lose 50% because it's going to drop to 5 cents. All right, and another stock that a lot of you are going to be happy I'm talking about, but the rest of you are going to be like, oh, no, Josh, don't waste your time even talking about it. And that is Mullen, M-U-L-N, Mullen Automotive. Now, back when this was $1.20, I actually was over on Larry's show, and a lot of you guys were asking about it. We were doing a live, and I told everybody that technically there already was a breakdown and that it was going to go all the way down to 30 cents. And of course, so many of you guys pushed back on me saying, nah, these guys are going up. You're wrong, Josh. I obviously wasn't wrong. It came all the way down to 30 cents. And it was interesting because some people interpreted my expectation that it would get to 30 cents as a suggestion to buy at 30 cents. Now, it did pop because 30 cents was an absolutely important historic support line, but ever since it popped from there, it's been slowly dwindling as well. It's actually fallen 80% since January and February. Now, to be clear, Mullen has a breakdown watch of 0.087. If Mullen loses 0.087, it will go to 0.02. There's absolutely no support on Mullen under 0.087. But if 0.087 holds, it's likely to backtest to 20 cents. So there's a small smidgen of hope for some of you who might be in it. If it holds that level, it could backtest to 20. And in my view, apart from a major positive news event, that would be your last opportunity to get out and to save some of your money. To be clear, Mullen is loss-making and also pre-revenue. The overall market view is that since the collapse of key banks, venture and growth investors are absolutely no longer going to make investments in unprofitable companies like Mullen. So they're facing the exact same problem as Verb, which is that they're just running out of cash. They're burning cash too fast. And this just isn't a great day for companies that are pre-revenue. And that's why the stock has collapsed. To survive, they can either sell shares or raise debt. Now, Mullen is going to have a very hard time raising debt. And on that point, this is actually something that the CEO had said himself in one of his forward guidance at one of the last earnings. And I'm going to paraphrase what he said. The company's ability to continue operating is contingent upon its ability to raise new capital and or financing to support operations. We're going to call operations keeping the lights on, as well as manufacturing so it can produce and sell cars. So guys, what they're saying is they're not going to be able to keep the lights on or make any cars unless they're able to raise debt or dilute shares, which is not a guarantee at this moment. Mullen is spending millions per month. It spent $73 million in the 3 months leading up to the last quarter of 2022. Mullen stock should go to zero in the course of this year, even after the upcoming reverse split. I'm going to be clear with you guys. I don't mean to hurt you. I do not recommend buying the Mullen stock. I do not own Mullen stock. Okay, the last penny stock I'm going to cover is TRKA, TRKA Media Group. Now, I'm going to give you guys right at the start the lines of support that I see that this stock has technically. It's 22 cents, 18 cents, 14 cents, and then 11 cents. But here's the most important thing I'm going to say about this. It's beneath its moving average. So there is no buy in my eyes until it rises back above its moving average. We need to see a green daily candle above the 50 MA. The pattern that we're looking for is actually one that we just got here in the recent months. Now, I actually threw this stock out to the chat group as a buy. I jumped in between 36 and 38 cents, and I doubled my money. And I did it because I saw the pattern that I want you guys to see. When it broke above the 50-day moving average, it gave us a close of a candlestick above the 50, and then we saw a couple days later it back tested the 50, which is something we need to look out for. It broke beneath it, but then it closed the day back above it. That was the buy signal. Now, we do not have that right now. We're beneath the 50-day moving average. I'll keep an eye on it because I know you guys like these, and if it begins to move and it breaks back above that 50 and it back tests like it did before, could be another opportunity. But let me be clear, I do not own any right now, and I see no technical reason to buy right now. And even though none of this is financial advice, if for some reason I own some right now and I bought it at a higher price at 30 cents, I would sell it at a loss because, like I said, when I gave you guys those support levels, I think we're going lower on TRKA Media because that's what the charts are telling me. I'll let you know, though, if it produces another buy signal. Okay, now for our large cap stock, Alibaba, BABA. I know you guys have been waiting for me to cover BABA, and I'm excited to cover it with you guys today. I see great things on the chart. I'm bullish on BABA, and you know what? I'll be honest. I've made great money trading BABA in the past. I called BABA a buy at $58, $59 when it was up at $100. I said this stock is going lower. It fell all the way down there, and a lot of you followed me and put buy orders in at that ridiculously low price. They got filled, and then we went all the way back up to $120. I've had a ton of success trading BABA, and right now I'm in a very successful and profitable trade on BABA, and I think we're going to do it again, and I'm going to break down the technicals for you guys. Okay, in the recent time frame when BABA was up at 120, people kept asking me, Josh, should we buy at 115, buy at 110, should we load back up at 105, should we load back up at 100? I kept telling everybody, be patient, be patient, be patient. We don't have a buy signal on BABA yet. Now, I did eventually tell everybody I'm buying at $92, which turned out to be too early. Now, because I have the resources, when it fell to $89, I doubled down and we got a pop back up slightly beneath $93, and I was able to get out with a small profit. At that point, I began to watch it looking for a better level of support. And eventually I happened to notice that we were dealing with an inverse head and shoulders pattern on a long 12-month period of decline, which is actually an extremely bullish signal, and I laid it out for you guys. The first head had a low of $79, and at that point, when we got a lower low after that, and we got back up to 120, which was where the neckline is, I said to you guys, after that initial trade that I got out of with my stop loss, I said, guys, the absolute buy entry for this stock is going to be another completion of the other shoulder, which is at $79.90. And that, again, turned out to be a perfect call. We got the other shoulder of our inverse head and shoulder pattern. And since then, we're up 30%. When it ran up to $105, it's pulled back a little bit. And that's what we're going to examine. Where is it going next? Where is support? And where is it ultimately going to go? Where's the big opportunity lie? I'm going to break it down for you guys. But let's take a minute to talk about the big picture view. What is an inverse head and shoulder pattern? I want you guys to know that that pattern is believed to be one of the most reliable stock patterns in trading. Now, if we ultimately come back to the neckline of this head and shoulders, that's $120. And that's where I think this thing is going. If we break $120 and we close above it, that's the fulfillment of the bullish head and shoulders pattern. That means that we're going to go the full length of the lowest part of the shoulder to the highest part of the head inverse, which means that we're going to $180 on BABA in the long term. That's not going to happen overnight, but that is the big picture that we're slowly moving towards with BABA. So at this point, I'm holding the shares that I bought right at $80 and slightly below and slightly above. I got that range. I'm holding those for the long term. I went all the way up to $100, $105. I may be adding to my position. I'm going to be going long on BABA right now. Now, like I said, I think we're going to go to $180. I'm not going to be selling mine anytime soon. I'll be looking to add call options on the pullback so that I can double dip on the bigger move. Let's quickly just talk about the fundamentals of Alibaba. China is doing that QE, quantitative easing, for the first time, and I believe this is going to have a direct impact on Alibaba. But another big news event, and I happened to talk to another trader that lives in China, and he shared with me how important of an event this was. The event I'm referring to is that Jack Ma made a rare public appearance back in China. This was a massive signal to a lot of Chinese people about the fact that there is a returning cooperation and peace between President Xi and Chinese big tech. I want to quote this article. This is a picture of Jack Ma hanging out in China. This article said that in recent months, Beijing has signaled that its onslaught on the internet industry may be coming to an end as the economy struggles to pick up speed after years of COVID lockdowns and a real estate crash. So the bottom line is that the big picture is that President Xi, he needs those capitalists like Jack Ma to come back and begin to pump these companies, get behind them, stop restricting them, and let them grow and do their things. I think this is an absolute green light, and I don't believe that even if we get into a bigger recession here in the States, I don't believe that's going to slow down Alibaba. I think Alibaba has booked its low, and it's got a nice little run ahead of it. Remember that a lot of American big tech companies have doubled, gone up 100%. We saw Tesla go down to $101 and then all the way back up above $200. It would be absolutely nothing right now for Alibaba, BABA, to go back up to $180. That's the minimum that I'm expecting right now, and the technicals are supporting me. Now, we did get a pivot volume sell signal when BABA hit 105, which simply meant it was overbought and it was going to cool off. If you guys are looking for a conservative entry point that we may or may not get, there is a fib level of $92.59 that would be perfect if it were to come all the way back to go in heavier for a bigger move up. All right, to recap, the very best entry right now would be the 92.59 fib level, but it may not get down there. So lighter support levels that we may see it find support are $96.20 and $94.05. Now the current fib trade range that it's in is the $98.64 to the $107, which would be its natural next price target and area of resistance. I want to point out that we're above the 50-day moving average and the 50% mark on the RSI, showing bullish momentum, as well as the fact that the MACD gave us a buy signal on March 21st, which we're currently operating on as far as a go long signal. And I want to point out that that means that the bulls are in charge of BABA. We're going to be covering more of your picks. I'm going to be covering EV stocks, banking, more large cap, big tech stocks like Nvidia, Apple, and Tesla. I wanted to cover them all today, but we just don't have the time. Stay connected. Thank you for hitting the like and subscribe if you don't want to miss out on these technical and fundamental analysis that I'm giving you guys with these daily stock overviews. As always, peace and blessings, my friends. Click that link for the Moomoo Investment app. Get that free stock. that money coupon and that free Bazinga Pro for a month. And then you can come find the Stock Josh family chat group. I hope to see you guys over there. Take care.